Hello and welcome to the second of our Minds and Money 5 at 5 shows sponsored by Sprott. My name is Andrew Thake from Minds and Money. For those of you attending 5 at 5 for the first time, the aim of 5 at 5 is to maintain engagement between investors and miners through a lightly interactive format during the current situation. A few admin announcements before we start. To make it as interactive as possible, please have your video switched on. To ask a question, you can either submit them in the chat function at the bottom of the screen. You can also select the participants function, and then you can wave your hand virtually and we can go to you and you can ask your question live. We have a star-studded line of guests. So without further ado, to introduce them, I'd like to hand you over to Matthew Gordon, Chief Investment Officer of Ptolemy Capital and also founder of Crux Investor. A warm welcome to Matthew Gordon.
Thanks, Andrew, and also thank you to Minds and Money for setting this up. It's a star-studded panel. We're going to hear from them all today, but just a plea to everyone listening into this, do join in. We really do want this to be as interactive as possible, so lots of hand-waving, thumbs in the air, and joining in at the end with questions. You're able to do that on the chat function, so do send your questions in for any of the companies and I'll be sure to ask those. So today we have Alberto Lavandeira, the CEO of Atalaya Mining, who will be on first, Julian Stephen, who's the MD of Sovereign Metals, Paul Cronin, who's the MD and CEO of Adriatic Metals, but David Southam, MD of Mincor Resources, Darren Gordon, no relation, MD of Centaurus Metals, and John Deniz, CEO of Paragon Funds Management, and of course, key sponsor here, Peter Grosskopf, CEO of Sprott. So welcome to all of you. We don't have much time. We're going to condense it down. So we're going to kick off with Atalaya Mining, which is a fast-growing AIM and TSX listed mining and development company producing copper concentrates and silver byproducts at its Proyecto Rio Tinto site in Spain. It's currently going under further expansion. The company has a phased earn-in agreement to acquire up to 80% of the project. It's a brownfield copper project in the northwest of Spain, which is at permitting stage. So Alberto, welcome. How are you? Alberto is on mute.
Okay, now they allow me. They need to connect me. Thank you, Matthew. Well, as a summary for Atalaya, Atalaya is a mining company in Spain. We are mining the old Rio Tinto mine, which has been in intermittent mining since the Roman times, so several thousand years. And believe it or not, Rio Tinto and others have left enough copper there. Low grade, but quite a significant amount of money. If I had to describe Atalaya, is focused in copper, very fast growing with long life still. And the best thing we have is that we have been able to develop the Rio Tinto project in a very short period of time. Only 6 years ago, there was basically nothing here. The mine had been shut for 15 years with equipment running rotten there. It was owned by a junior company called EMED Mining, and basically we put a team together, changed the name, refinance. In 1 year, was up and running with the old installations. In another year, we had expanded to double the capacity. This time, adding new installations, and all this done with around 150 million capex, when the feasibility study was supposed to be 300 million, and also done only in 2 years since getting here, versus 3 years from financing as was planned. Further to that, as Matthew said, we engaged in an expansion. We had been drilling, we found more ore, we found reserves over 20 years, so we expanded the mill to 15 million tons per year. That's 50,000 tons per day. Still keeping a long life of around 12 years at least. And we are up and running. Actually, even with all these problems with the virus, we have had a record month in August, and we'll be achieving our targets of around 55,000 tons of copper produced this year, with a very low grade of around 0.44% copper which is quite interesting thing to do. And I think that's a summary of our company. In addition to that, we have other things to grow, like you have mentioned, the Touro project, the north part of Spain, northwest, copper, clean, very clean. It's a different stage. We got a negative environment pact declaration from the government, but we think we will get it back late this year or early next year. I mean, we believe that the reasons to give them negative pact declaration were not correct, and we are going to appeal, and we hopefully will get it. Otherwise, we'll present it again with different parameters, and this project has to go into production. And based on the experience of our teams, I'm sure it will be producing soon. We are also looking at opportunities all over the world. The team that's working here, most of them are Spanish, but have the experience of Rio Norte gold mines and a private company in Congo also, where some of them have been participating in five startups from scratch, permitting to construction and operating. So it's quite a team that has certain advantages in places where we can speak Spanish, like South America, Central America, or in Europe simply by proximity. And with that, I will let other people speak because I didn't want to bring any slides.
Okay, thank you very much, Alberto. There's no questions been sent in by the listeners yet, so please, everyone, do join in. Question to you, Alberto. The last 2 years have seen your share price with a sort of gentle decline. It seems that the market's not interested that much in your story. What are you going to do to change that? Where's the growth coming from?
The growth, I mean, there are two reasons. One, the price was going up was going quite well. Then the copper price is starting to decline, and with that, our share price. Also, the negative resolution of the environmental pact statement in January, coupled with the virus, have made our share price decline. Since then, it has recovered to probably to the levels that it had in the beginning of the year, and I think we will end up being going back to where we were. What are we doing? We are doing basically continuing with production, trying to increase the liquidity. We have a problem, believe it or not. We have a problem. The problem is that we have a very loyal shareholders. 4 of them control 72% of the company, and they don't want to sell at these prices. And we have lots of other funds from Spain, from Italy, and from UK mainly, which are buy and hold. So it is a problem of liquidity, and this avoids other people coming in. But eventually people will realize that it has to pay because the shares are there, there is demand. They will eventually the price will go up because we are offering incredible value. We will be trading at 3 times EBITDA. With these current prices, we are generating at $3 per pound, $100 million of free cash flow. Our all-in costs are truly 210, in between 210 to 220, and what I mean is all in, not any other costs hidden there. So we generate a lot of cash flow even at the prices up to 50, and in fact during the first half of the year we generated 22 million euros, even with a copper price of around 240. So eventually this will prevail and our share price will move up. And if not, somebody will enjoy the dividends in the future.
Okay, with copper prices recovering at the moment, what's your expectation on your cash position by the end of the year?
The cash position at the end of the year should be roughly around $70 million, or less, or maybe a little bit more, if it stays like that.
Okay, and with this continued production of cash, if you continue to produce cash, what are you going to do with it?
Well, the original idea was to use this to fund this internal generated cash flow to fund the expansion of Touro. I mean the new project of Touro, partly because we don't have debt and we need to raise some debt. But if we don't get Touro, eventually we will have to give some dividends back to the shareholders, because at the end, this is what it's for.
And are you considering
Alberto,
any kind of M&A act? Sorry.
Oh, I was going to ask the same question. So, Alberto,
yes.
it's rare for a copper producer to transition from one project to multiple projects. You're on the cusp of doing so. I've watched other companies add a ton of value, like Lundin Mining and First Quantum, as they made their first deals. So my question to you is, how do you make a deal? How do you see the world of copper now to make a deal? Because as you say, you'll have 400 or 500 million of financing capacity here. So what do you look for?
We are looking at basically copper, but also base metals in general. If you look at my background, when I joined, I was in a company called Rio Northea, which was a junior company, which unlike others of basically being sold, eventually was being sold, but 12 years later, we built several mines. So at the end, the value is created by growing, and it was a little bit like a mirror of First Quantum, as you say. Eventually, we were bought by Lundin and Redback because we had acquired Tasiast. We saw the value. We bought it for 50 million. I think this is the same thing. We bought Toro for almost nothing, for almost an option. We are doing other things very silently. We don't announce. We're not promoters. We don't issue press releases and things like that. But we are working silently. We have a team of people looking, and I remember the last board meeting, we reported that we have been looking at 35 projects or companies in this first 6 months. So eventually things will come, but we will not pay for the sake of paying. So we will grow only if we can add value. It's very simple.
Okay.
But yes, we are looking very actively. It could be through an acquisition, it could be through a merger, it could be something that we could do at the Pirate Belt to add some value. But yes,
I guess in the
company,
meantime, you have to watch out. You don't get acquired too quickly because your multiples are quite low for the copper sector.
Well, we have the blessing and the curse of having 4 big shareholders that control 72%, and 3 of them control 50% in any combination. And actually, 2 years ago, we had some approach of somebody, which started with a cash proposal, which was healthy. Then it started changing from cash to shares, which was not so healthy. And our shareholders said, look, we are here for business. And of course, the company is owned by this 4 big shareholders plus others. And of course, this will come. But our job here is, our goal is to create value, and we will do it. We'll do it. There's no question about that.
Okay. Can I ask a question? It's from John Treen. It's rare for a construction company to come in lower than the feasibility estimates. How did you do it?
Look, I can tell you it's almost a joke that I had to, in 2016, half of my presentation was to convince people that I was not lying, starting by my board. When the first time I said, well, we are going to be cutting $50 million of capex, and at the end it was like 75. The first people that didn't believe it was my board. I said, well, how the hell are we doing this? Well, the first thing is, I can give you lots of ways we did it, but it was not by shortcutting and using old equipment, second-hand equipment. It was simply having a very good team of people that had done it before. And for example, we didn't go turnkey. By not going turnkey, you don't need to have a full project, which the companies like the Fluors, like the EMEC and all this, they will basically they make the money by selling you hours. We did our own basically supervision, our own management, purchasing, asking for offers. Big engineering firms, they make the money by making the projects be very expensive. This is the first principle. The second principle is really keeping everybody very honest. We had bonus for cost going down, not cost going up, and by cutting times. Then we also use lots of imaginative ways. For example, we used our lines of credit to warranty suppliers so that they could use their bank loans. So for example, the mills of the second phase were paid in 2 years instead of going to a big company and paying it all ahead. The contractor, the mining contractor, was paid also in 2 years. So what we were doing is warrantying, but we got some cheap financing from their credit lines, which in Spain are very low. So that's the way. Basically, we finance with with very imaginative ways. Another source of reduction was we had to place a bond that was supposed to be cash backed for environmental restoration, which was 29 million euros, almost $35 million. And we went to an insurance company and put an insurance policy there, which cost you 100,000. So you start cutting here and there, and you cut the 30 million of EPCM and you do it by 5, and that's how we do it.
Okay, brilliant. Alberto, you can come on the show and tell us all about it in detail. So thank you very much for your answers. We're going to have to move on. Andrew's got me on a tight leash here. So we're going to move on to our next company, which is Southam Metals. We're going to speak with Julian Stephen, who's MD there. They're aiming to unlock value, a significant value of rutile. So Julian, over to you for your 3-minute run through.
Thanks a lot, Matthew. So Southam is a rutile company, and our project is in Malawi in southeastern Africa. This has been a grassroots, a new grassroots discovery by our team. We no rutile deposits were known in the area where we're working previously. So just a little bit about the commodity. So rutile obviously is a titanium mineral. It's the premium preferred source of titanium, particularly for pigment producers. Current price is around $1,200 a tonne. The global supply of rutile at the moment is in structural deficit. This is because, I guess, many sort of mineral sands mines out there that produce rutile have depleted their rutile reserves and they're mining lower grades. For example, one of those companies is Base Resources mining in Kenya. Their reserves are nearly depleted and their grade is going down. And in addition to that, there's been a real lack of high grade or real lack of discoveries, I should say, in the last couple of decades, I suppose. The other important point about rutile versus its, I guess, poorer cousin ilmenite is that it has some really favourable ESG outcomes in terms of energy consumption, much less energy required to produce pigment, very low in terms of carbon intensity versus ilmenite pigment, and much less waste produced, obviously. Could I have the next slide, please, Elaine? So what have we discovered over the last, really, we've been looking for rutile in Malawi for about 2 years, and that's really culminated in the last 6 months with what we think is a company-defining asset. Now, this rutile deposit is called Cassia. It's in central Malawi, or our large ground package is in central Malawi. At the moment, we've discovered mineralisation over about 7.5 kilometres of strike and up to 3 kilometres in width. The mineralised envelope is open in most directions. So you can see, and mineralisation goes down to, high-grade mineralisation goes down to, on average, about 8 metres depth. So in anyone's book, you can see this is a very large tonnage deposit. We actually think it will probably be the largest rutile deposit in the world. In terms of the geology, it's a little bit different to your standard placer mineral sands deposit, in that this material, the rutile is hosted in, is saprolite, and that's a weathered material. So you've had fresh rock that's been weathered over millions of years. It's disaggregated, it's soft, it's free dig, it's free milling. It's able to be processed exactly like a sand deposit. It's slightly higher in slimes, but it does produce a very high quality product at about 96% TiO2 at very good recoveries. All of the rutiles at surface. Elaine, could we just flick over to the next slide, please? And you'll see on the cross section here, you can see the higher grade material all occurs at surface. So we're looking at grades, for example, just sort of in the middle of the slide here, you can see Sierra Rutile's resource there. about 1.1%, 700 million odd tonnes, and their reserve at about 1.3% rutile. So you can see we're in the ballpark of those grades, and indeed higher, and particularly right at surface. Because this is a residual deposit, at surface is where you get the high concentrations of rutile. So what does this mean? This means that early on, we can dive straight, in terms of a mining operation, we can dive straight into the high grade material. It's right at surface. First bucket will be into high grade, and off we go. And this should be able to, this should assist us in paying our capital back rather early. So we're in Malawi, and look, it's not a very well known Southeast African country. It is a British colony, and it's a very easy place to work. And look, we are landlocked there, but we've got a rail line running within 15 kilometres of the main deposit that has capacity for us. That rail is controlled by Vale and Mitsui. They've got about excess 5 million tonnes capacity, and we have an MOU with them in place already for export of our products out of Malawi. What are we looking at for the next, what's upcoming, I suppose? Well, we've just completed a bulk metallurgical program, primarily to produce, to optimise the flow sheet, but as well to produce product for testing by potential offtake partners. We've had a lot of interest from major offtakers, both in the pigment sector and also traders. We've also had interest from other mineral sands miners. Then we'll be looking at to produce our maiden mineral resource estimate for Cassia in about 4 to 6 weeks. And as I said before, we think that will be very large, and from what we're seeing at the moment, it just keeps continuing to grow. And we'll be looking at completing a scoping study towards the end of the Q1, early Q2 next year. So I will finish off right there.
Thanks, Julian. Thanks for running through that. Just a couple of questions for you. Your resources had quite a few high-grade hits. It's also had a lot more sort of lower grade hits too. So what's your plan? What's your schedule for managing that grading?
Yeah, well, we think that, as I said, this will be very, very large, and it appears to us that almost all of the high grade is at surface. So we'll just, really, it's not about the 500 million tonnes or billion tonnes or something like that in terms of a mining operation. We'd be, say, looking at 10 million tonnes a year for, say, 20 years. So really, it's about your best 200 million tonnes. So the best 200 million tonnes is likely to be near surface, and it's likely to be, and it will be that higher grade. So yes, there is a lot of lower grade material, but there will be enough significant high grade material from what we're seeing today to have a head grade well above 1%. And, really we're chasing that 1.3, 1.4%, particularly in the early years.
So I've got a question for Julian, if I may.
Sure, John.
Julian, John Deniz here. So that cross-section that you just put up earlier,
Yeah.
if I was to, is the resource from what you've drilled today genuinely homogeneous? Like if we looked at sections along your long section, is that indicative, what you just put up?
It's indicative. It is a better section. There are some areas of lower grade where you might have had this high grade zone at surface stripped off by erosion, but as I say, it's very large. So we think that we'll easily get that 200 million tonnes of plus 1%, whether it's in this resource estimate or the next one. We're not sure at the moment, but yeah. That's pretty representative. It's pretty representative. It's not like any ore body, it's not perfect. There are a few lower grade areas within it, but that is generally representative. That section, by the way, is still open. That's 2.8 kilometres wide, and it's still open to the east. And we're finding more mineralisation out towards the east as well.
But you can already say that there's enough high grade for to be getting into. Say best areas, highest cash flow for earliest payback. You can already see that. We
can see it. There's one zone in particular that section sort of was on, I guess, one of the first sections from that zone, and it's the one we've done the most drilling on at the moment. But we can see that zone for sure, and some others are starting to pop up. Early days on newer zones, but they are starting to pop up. We are starting to see those sort of grades over very consistent or a very significant cross strike widths in other areas as well.
And can you give us a sense for the infrastructure piece? You're in Malawi. For those that aren't familiar with the area, give us a sense for any bottlenecks, any issues getting on rail, road. Just talk us through it.
So look, so actually the deposit is just 35 kilometres away from the capital city. So what does that bring along with it? We've got a paved highway within 5 k's of the deposit. We've got an operating rail line within 15 kilometres away. That's operated by Vale and Mitsui, as I said, and we have an MOU with them for export out of the port of Nacala. In terms of power, well, we're near the capital city, and there's significant power infrastructure there. And into labour, obviously, we can basically bus people from Lilongwe out to site every day, and both professional and semi-professional people. So we've got and fresh water, plenty of fresh water in Malawi. So we're ticking a lot of boxes in terms of infrastructure. We're lucky, it is a bit of serendipity. We found this deposit, in an area where there is good infrastructure. A lot of people would say that part of Africa doesn't have the best infrastructure, but we serendipitously this deposit occurs with all of those things nearby.
Brilliant. Thank you very much, Julian. It's time to move on to the next company. So I appreciate your summary there. People do go and take a look at the website. We're going to move on to the award-winning Adriatic Metals. And we've got Paul Cronin, MD and CEO of Adriatic, to give us an update. Welcome, Paul.
Thanks very much, Matt. Good to be here. Yeah, look, we've had a busy year. And in fact, since Adriatic was incorporated back in 2017, we've been moving the project ahead very quickly. We went from a few archive boxes of historical information through to a maiden resource, listing on the ASX, then a maiden resource in July 2019, through to a scoping study at the end of 2019. We've just put out a maiden resource this week, which was overwhelmingly hated by the market, but I think they worked it out the following day. And at the end of this month, we'll be putting out our pre-feasibility study. Look, fundamentally, the project is a silver dominant polymetallic project located in Bosnia and Herzegovina, about 55 kilometres north of the capital Sarajevo. It's a brownfield project. It was previously in operation. It has an operating railway, water, power, roads. So it's blessed with great infrastructure. But its biggest attribute is it's unbelievably high grade. Our updated resource that we put out yesterday was 12 million tonnes on a silver equivalent basis of just under 500 grams a tonne. So making it a very high grade silver dominant project, but it'll produce concentrates that are both silver concentrate, which is going to be the majority of your revenue, then a zinc concentrate, a gold silver pyrite concentrate, and then a barite concentrate. We've spent a lot of time working through various iterations of the project and how it could look, looking at the underground, looking at the open pit, looking at the metallurgy, and I think metallurgy has been our key focus because it does have that complex flow sheet. And the work that we're doing at the moment with Ausenco, I think will demonstrate that this is actually a very substantial project. We've built a good team in Bosnia now after operating there for a little over 3 years. We've got about 50 people on site, from environmental techs, drillers, geologists, HR, procurement, all working within our local community and working with our local community to develop the project. We've had quite a lot of permitting success to date. We've received our environmental clearance for our open pit, for our plant facility and our tailings dam. On Monday, we had our public hearing for our environmental permit for our underground mine, and that was very well received. And so we're starting to see things move along here pretty quickly. At the current rate, we expect that we'll actually start some pre-construction activities later this year. We're very well funded to do that. We have a little under 10 million sterling in the bank at the moment, and we'll look to commence the main component of the construction in late Q2 next year, with production commencing, or commissioning, I should say, commencing in late Q2 2022. So I think I saw an article recently that said, the average time from discovery to production for a mining project is about 16 years. Well, all going well, we'll have done it in 5. And in addition to that, we've recently made an acquisition of another company in neighbouring Serbia, a Canadian listed company called Tethyan Resource Corp, whose principal shareholder is Richard Bork. We'll be completing on that acquisition. I'm expecting that to complete next week. We've recently completed a confirmation drilling program. It's a bit like our Rippert's deposit, where it's a whole pile of historical data that needs to be verified. But we've done that verification work, and now we will be investing in another 12,000 metres of drilling on that project in between now and mid-December. And the strategy here for Adriatic is really straightforward. Yugoslavia sits on the edge of the Tethyan mineral belt. It has some of the best deposits, certainly in Europe and in the world. It's the home of some pretty big mining companies, including Zinjan and Rio Tinto, who are actively progressing projects there. But historically, there was a lot of work done under the Tito Yugoslav era. But typically that work was done in such a way where they were primarily looking for base metals, so rarely tested for precious metals. They rarely did exploration further than what they needed in terms of having a reserve that was capable of supporting the capital for the project. And they very, very rarely drilled below 150 metres because drilling was expensive. And what we are doing is systematically identifying projects like this. Rippert's was one, Kizabach is another, that with a little bit of investment, a few smarts and a decent team, we can actually realise the value of those assets across Yugoslavia, being Bosnia, Serbia, Kosovo, and eventually into neighbouring jurisdictions such as Montenegro and North Macedonia.
Okay, can I just thank you very much for that summary, Paul, much appreciated. Polymetallics, much misunderstood by the marketplace. That's because they're quite complex. And you touched upon flow sheets there. How do you go about deciding which flow sheet is going to work best for the company?
We started from the marketing end. So we looked at what we potentially thought could be made in concentrates. Then we went out and did a marketing study. So we engaged some very experienced commodity traders, concentrate traders, to come back to us and say, listen, this is what we think is saleable. We then did some initial metallurgical work, looked at what we could reasonably produce, re-looked at that in terms of its marketing potential, and then went back from there and said, okay, this is what we think we can produce. Now, every time you do a metallurgical test work using one sample, and that's not necessarily representative of your entire life of mine. So this year, the focus has been on large-scale variability test work, where we've looked at the 7 different ore types that we have. We've looked at those ore types and we've separated them into different metal assemblages, different grade. And what we've done is quite a unique piece of work called geometallurgical domaining, where we've actually looked at the mineralogy of the mine units themselves, and said this is the proportion of minerals that is in each mine unit, and therefore this is what we should be producing at the end of the day, because ultimately it's the minerals that are hosting the various metals, and we have some minerals that host the same metal, and that work is all being incorporated into this pre-feasibility study, which I know has been almost a year in the making, but it'll be worth it at the end of the day.
Okay, I think John, Deniz, you've got a couple of questions that you want to throw in.
Yeah, thanks. Paul, full transparency, as you know, very happy shareholder. We're very happy shareholders since IPO. You're coming into an interesting phase with what I think the PFS is imminent. I suppose there's sometimes cause for concern from some investors whether, as you tighten up from plus or minus 30% in the scoping to say PFS, what CapEx might look like, OpEx, recoveries, as you get to the finer end of the project, sometimes there's sort of queries. Can you maybe just give us a sense on how those key parameters are going?
Yeah, I think metallurgically was the biggest parameter, and that is one of Azenco's strengths. So we've engaged Azenco to do the pre-feasibility study, as the principal consultant. Wardell Armstrong have been working with them, as has a very reputable and experienced metallurgical consultant called Len Holland. And we've spent about $2 million so far on metallurgical test work. We've not spared the horses on this because we recognise it as a key risk for a project like this. So that's going to be reasonably well known. There isn't going to be a huge amount of additional network that we need to do. In terms of the costs, in the scoping study, we took a fairly generic approach, and we said, look, let's go through the database and let's grab these costs out for this type of mining. What we've done now is we've actually localized these costs. So we've gone out to mining contractors and we've got quotes on longitudinal traverse sublevel stoping, using local costs. And I think you'll see some of our costs come down a little bit. You'll see some of our capital costs come down a little bit, because we've made the effort to go and actually get quotes. But we're also expanding our procurement team at the moment, and expanding our procurement policies that dovetail into our ESG framework. That's also going to help us, develop a network of suppliers in Bosnia. And Bosnian wages are quite low. Bosnia has two key operating advantages, as I see it, three actually. One is it's got great infrastructure, but two, it's got very low wages and very low energy costs, primarily because it produces a lot of hydroelectricity. And we believe that there are going to be advantages in terms of lower cost fabrication of some of the plant, for example. But we also believe that using our procurement policy, we can encourage more investment in some of those key suppliers that will create a more sustainable outcome from the project. So not only are we trying to keep our costs low in that regard, but we're also trying to make sure that even post, the mine closure in 15, 20 years' time, that this project has a lasting legacy on our local community, both economically and socially.
Brilliant. Thank you, Paul. That's your time up there. Congratulations on the Tethyan deal. Hopefully, if you get it over the line in September. We've got to move on to David Southam at Mincor Resources. They're an ASX-listed company focused on re-establishing sustainable, the word of the month, high-grade nickel production at their Kambalda district of Western Australia. David, over to you.
Great, thanks, Elaine. If you can move on to slide 2, which I'll keep on. Yes, we purposely use the word sustainable. In fact, we've coined a new phrase that nickel is actually the happy metal. For gold producers out there, we believe that they're the misery metal. They dine out on bad things in the world. Through COVID, we've seen that clean air is a very good thing, and electric vehicles is obviously the future. So we're a green, child-friendly nickel sulfide company in Western Australia. And on that, where we are in Western Australia, we talk about some of the ingredients for success. We're in the Kambalda, Kalgoorlie area, well understood, not exposed to cyclones. We are in the most prolific nickel belt in Australia. So for those Canadians, it's our equivalent of Sudbury, where 1.6 million tonnes of nickel have come out. We've actually made the first high-grade discovery in the region, greenfields discovery. This is not brownfields, but greenfields discovery in 20 years in Cassini. We have delivered a DFS just recently as well, and signed mining contracts. So really, we're a nickel sulfide story, which is on the cusp of making that final investment decision. And in building those blocks, there's a few things that have occurred. We have raised some money along the way and have been well supported. So strategically, we're in an interesting position. Our largest shareholder is the private company or family office of Andrew Forrest, Minderoo Group. They own 15% and have been recently buying on market our stock. And Andrew has a view on base metals and particularly nickel and its future with the world deciding to electrify. We also have Independence Group who hold 8% of us, who have built up a stake as well, being Australia's second largest nickel producer, which is interesting as well. And as a side story, all of our deposits are right next door and adjacent to BHP, who would probably say that they are now enjoying a very happy second marriage with nickel. After the first marriage nearly ended in divorce to probably Glencore, but it was rescued back and is now a key component of BHP's future. And in fact, they've actually acquired an asset. So very interesting location. And BHP with that happened to be our offtake partner. And one of the keys from our DFS is that we end up producing 16,000 tonnes of nickel in concentrate for a capex cost of $68 million Aussie. So you say, well, so in US dollars is around $50 million. So you say, how do you do that so cheaply? We are going to use a nickel concentrator, which is, if for any golfer out there, it's probably about 2 drives of Dustin Johnson away from half of our mines. So it's extremely close. It's a concentrator which is designed for Campbell ore. No one else is using it, and effectively, we don't have to build a plant. We pay a cost for processing as if we're the owner. We don't have to build a tailings dam. And as soon as the product is produced out of the concentrator, we sell it directly to BHP. That means that we have a very low capex cost. Peak funding is just under 100 million Aussie, and we currently have sitting cash at bank around $100 million Australian. But we do have to keep running the company, and we're going to keep exploring. And I'll keep to that slide for maybe when I'm asked a question later. So we are in the midst of also raising a small amount of debt. We expect to have some news on that very soon. We've narrowed a large field down to a smaller field of about 4 entities, banks and institutions, and we expect some good news there in the not too distant future. Our final investment decision we are planning for this month, and it's not really a good idea to raise $100 million from shareholders and have it sitting in a bank account earning 0.5%. I don't think that's why they've supported our business. And then finally, I suppose, why are BHP looking to support us? The fact is that they need third-party nickel concentrate within their system. The mines that they use themselves do not produce a good enough quality concentrate. It's lacking in a few things, the main one being what's called an iron to MgO ratio. I won't get into metallurgy too much, but it's too low, can't be smelted. They have to bring in third-party feed, and we happen to be right next to their idle concentrator that we are intending to feed and being the only party using that concentrator. Our offtake terms are confidential, but what I can say, having been in the nickel business and cut offtake deals with Glencore, Trafigura, Jinchuan, BHP in the past, Tsingshan, is that they are modern offtake terms, which means the commercial terms are very good. We also have a copper byproduct credit plus a small cobalt credit. So that's probably my minutes taken up.
It is. David, thank you very much for that summary. Wonderful. So a couple of questions You talked about the offtake agreement with BHP in exchange for access to the mill. Do you feel that that potentially, at the end of this contract, could cause more problems than it solves?
No, it actually, because of BHP's need for Kambalda concentrate, let's just say we could have signed up for a longer term, but we don't yet necessarily want to give away the farm. I would love to buy BHP's Kambalda nickel concentrator myself, so I didn't have to toll treat it through them. But I think on the 22nd time that I've asked them if I could buy it and I've been rejected, you sort of almost have to give up. But we're still there just in case BHP change their mind.
Fair point. Okay, next question, if I may. Your resource is getting quite deep. It's below 500 meters. How much longer are you going to be able to continue drilling from surface, and when will you have to start doing that from underground?
Well, us Australians are pretty good at mining, and when you look at the history of Kambalda, most deposits go to about 1.6 kilometres. It doesn't mean that the deposit stops at 1.6 k's. It just means that you can get a little bit warm down there, and geotechnically it can get challenging. If I could just get Elaine to go to slide 3 again. We, with Cassini, the bottom half of that resource, we're only at 600 metres, and we're hitting intersections which are very thick and is high grade. If you're a geologist, an exploration geologist, this is what you dream of intersecting at night. When you're hitting 17 metres at 5% nickel, if you put that into copper terms, this is non-JORC compliant, but you're probably looking at around 13 to 14% copper equivalent. So we still have got another, you could argue, another 1 kilometre to go. And if I just flick you on to the next slide, Elaine, if you wouldn't mind. I've created a bubble chart, which is a way of getting around not putting out an exploration target. And what this shows is, on the left, you've got where typical Kambalda resources start before they are mined, and where they actually end up as a mine many years later once you can drill from underground. And the best example that suits my argument is the Otter Juan that started out as 17,000 nickel tonnes and ended up producing 317,000 tonnes. That was a Mincor mine. So we know what type of mines will go that distance, and every other mine is doubled to tripled to quadrupled, and you can already see Cassini as a brand new discovery is sitting high up on the grade curve, and if you go by statistics, it's going to be very far to the right by the time we're finished. So drilling from underground, which we've now got a budget for with this raising, is what we'll be doing.
Brilliant. Okay, and just it's a yes, no answer because we're running out of time here. David,
I've got one quick question.
Okay, that'll be it.
Okay.
Please,
with Tesla raising $5 billion yesterday, how long before they buy into nickel producers?
Yeah, really, really good question. I don't want to take this up for too long, but
No.
I've dealt with Tesla personally through doing an offtake with lithium for a company that we ended up selling to Wesfarmers. But one of the questions that we asked of Tesla is was what commodity are you after most, and it's nickel. So it's nothing new. The global procurement head for Tesla is an ex-Vale nickel executive, so that's no coincidence. And you've got Vale who have you've got Tesla who have a supply chain, and if they can go further upstream and secure nickel supply, it can go through that supply chain for them. So they get their batteries from Panasonic. Panasonic get their nickel sulfate from Sumitomo. Sumitomo gets some nickel matte from BHP. We supply BHP, and therefore we're a green company.
Yeah, well,
okay.
It applies to the next presentation too. So I thought I'd ask.
It's a great story. The next presentation as well.
Yeah,
it is. Okay, guys, and thank you very much, David. So as suggested, it's another nickel story. That we've got Centaurus Metals, also ASX exploration company focused on development of their Jaguar nickel sulfide project. They have a resource which they inherited from Vale. It's in Brazil, and we're going to hear all about it now from Darren Gordon. Welcome, Darren.
Right, thanks, Matt. Yeah, great to be here. Won't keep us on the call too much longer. I'm trying to get through this relatively quickly. I guess for us, we've had a really exciting year. We were able to pick up this Jaguar nickel project from Vale about this time last year. We were fortunate that it's such an advanced asset had been held in their portfolio for some time without people really understanding that it actually existed there. There was a number of high-grade zones in the 55,000 metres of drilling that Vale had drilled, all diamond core. We have that core. We've subsequently picked it up, been able to drill it, and last month we were able to put out our maiden JORC resource. So 48 million tonnes, bit over 1% nickel, a bit over 500,000 tonnes of nickel metal. But I think importantly for us, we've got 80% of those nickel tonnes sitting within the 200 metres of surface. So this is a little bit unique. It has a high grade component to it, over 300,000 tonnes of metal, sort of running over 1.5% nickel. But to get those sort of grades in what is likely to be a project that's amenable to open pit operations, relatively low cost in the environment where we're operating in the Carajás of region of northern Brazil, puts us in a really good position to be able to take this project through to production. It is in the Carajás. I think that's an important part of operating in Brazil. Obviously, Brazil has had its issues in the past. We've been there for 12 years now. We've managed to find our way through it. We've managed to be able to do deals with Vale. And being in the Carajás with them effectively having a vested interest in the outcome of us getting into production is hugely important. We're only 15 kilometres away from one of their major mines on Puma. So a lot of work now going on, but you know, all the ingredients, good team on the ground, great resource, plenty of grade, going to be open pittable. It's in the Carajás. So right now, and we announced this morning that we've got about 75,000 metres of drilling to do over the next 15 months. A lot of that's going to be directed towards infill work, but there will also be extensional and step out drilling to be undertaken around the known deposits, as well as testing some new regional targets. Concurrently with that, we're working on scoping study work based on the existing resource, and we're sort of well down the track in relation to that, albeit that when we finish the scoping study, we're probably not going to be able to get the actual economics out due to ASX rules around having enough resource in the indicated category. So that's likely to come towards the end of the year. Just quickly there, you can sort of see the areas where we've got the resource, the gold labels of where we've defined resources. I guess the predominant components of that are at Jaguar South in the very southeastern corner of the tenement. There's about 3 kilometres of strike that Vale tested. We've infilled around all of that at Jaguar South, Jaguar Central, Jaguar North, and we've also drilled a couple of targets up in the northern part of the tenement, Onça Preta and Onça Rosa. You can see some of the intersections that we're getting, healthy wide zones, really good grade, but importantly, a lot of that stuff is very, very close to surface. If you look at some of our the more detailed presentations that sit on the web page, you'll get a better sense for the I guess the cross sections and the way that the mineralisation is hosted. But we will get onto those regional targets on the western portion of the tenement, and that should start to happen over the next couple of months. So right now,
okay.
Sorry, yep.
I'm just again conscious of time because we've got a very hard stop date there.
Yep.
Do you want to quickly wrap it up in a minute and we'll get into some quick questions, then we'll have to...
Yeah, Elaine, just flick to the last slide if you can. That'd be great. I guess really right now we're doing the drilling, we're getting through the resource, we're doing scoping study work. That'll be finished at the end of this year. We'll be rolling into pre-feasibility study. We're very confident with the economics of this project, given that it's likely to have a large portion in open pit. And we're really targeting having production up and running by the end of 2024. Main, I guess, timeline dependent factor is environmental approvals. We're very aware of what we need to do in relation to approvals, and we're well on track in relation to that.
Brilliant. Thank you, Darren. just a quick question for me, and if there's any questions from anyone else, that'd be great. I like the story. I think it will become a mine, but you have focused on the open pitable component. Where does the next growth come from? Are you going to have to do a lot more infill?
Well, look, we're going to need to do the infill just to be able to get numbers into the market, and that's really where we're at. When we picked it up, Vale had 100-meter spacing. We've closed in that spacing. We've got about 28-29% of the material indicated now. So we'll do the work on the infill to get to that, and that'll be part of delivering the study. But outside of that, we've really only scratched the surface. We've drilled down to about 250-300 meters. We still see there's huge amount of upside when you look at the number of, obviously, the Australian producers and where they are. The depth extent is there. We really haven't even tested that yet. But what we do see in the Carajás is that there's a lot of EM plates that extend well below the depth of our drilling. Gives us a lot of confidence that as we drill those targets, we'll find more.
How do you think the market is going to react when you start announcing these sort of lower grade numbers from the satellite pits?
Yeah, well, I'm not really sure that they'll be that much lower. There's some numbers that come out of Onça Preta and Onça Rosa that look good. I actually think as we go deeper, the grades will come up. Obviously, as you get into an underground mining scenario, you're going to be tightening up your parameters, and you're going to be narrowing in on your width of mineralization. So, I think in the open pit, you'll probably have a grade something in the order of sort of 1.2% nickel. And as you sort of go into sort of the deeper areas, I think that grade will come up, and that's where you're looking at where you're going to transition from open pit material into the underground.
Right. Thank you, guys. I'm under strict
Darren, could I ask one very quick question? Sorry to interrupt you. Give us some arm waving, not disclosable numbers, but in your eye, CapEx and cash cost.
Yeah, look, I think it depends. It's a bit of a hard one to answer right now, Peter, only because we're still doing the optimization work. So we're still trying to really size what we've got.
Ballparks?
I reckon, we're probably talking around 150 million US or something like that, I think, for the CapEx of the project. But yeah, I think, the unit costs are going to be
too early.
Yeah, a little bit too early. But all I would like to say to that is that we will have very cheap power costs in Brazil. Most power is generated in hydro, and so it makes it quite an attractive operating environment for us.
Okay. Sorry to interrupt.
Darren, if you can't give us cash costs, just quickly on ore body attributes, is there much pre-strip, strip ratios? What do they look like?
Yeah, look, we haven't included any of the oxide material in the resource. There's about between 5 and 20 meters of cover, a very small transitional zone, and then we're into fresh sulfides. So, there's not going to be any issues in relation to metallurgy. There's not going to be a large pre-strip. And we think that we've got, really nice pits that will run low cost.
Okay, thank you very much, Darren. Okay, we're going to have to call it a day there, folks. So thank you very much for all of those who made the time to listen in from wherever you are in the world. Some interesting conversations and stories told there. Do go look at the relevant websites. And of course, to Alberto, Julian, Paul, David, and Darren, John, and Peter Grosskopf, we thank you again for your time. Much appreciated.
Thank you.
All right.
Thanks, everyone.